Yes, friends. So we start with a new chapter, cash flow statement. So when I started to prepare this for the first time, cash flow statement, I really thought again Inter thing I have to come across. Correct. In Inter, such a detailed cash flow statement, two balance sheets. When I started in 2017, 18, I started. Inter was my 2002, 2003 story. At that time, I remember two balance sheets they used to give, we used to prepare the cash flow statement, working capital. I thought again I have to see same thing. Followed, no? But this is a very small chapter, okay, that two balance sheet and all, they will not give you. It's a very simple at the final level, but with certain adjustments. See, final means you expect any L2, L3 level question, where they will ask you certain consolidation related adjustment, forex related adjustment. So those will be the specialty here. Okay, your basic plain cash flow statement from the balance sheet and all, they are not going to give you. Now coming to the cash flow statement, see what is the authority for the cash flow. See, it all starts with the section 128 that you need to maintain the books of accounts. Why? To prepare the financial statement. Now what do you mean by the financial statement? Now section 220, 240 definition comes, and one of the items is the cash flow statement, and why we need it to get a better understanding. And to see today's day we are passing so many entries which somebody will not understand. Present value of the future cash flow, it seems ROE assets, this, that, impairment, revaluation surplus, you transfer this. But people are really interested. But tell me at the end how much cash you earn, because I want to value your business using cash, free cash earned. So this clear picture, like intercompany transfer, I can do anything there. I can, with the accounting entries, I can fool you anything. But ultimately question comes how much cash you are having. So that picture I can clearly see in the cash flow statement. So learn, students, it is a skill, okay? Just because we are becoming a chartered accountant, we will not understand it. Analysis of the balance sheet. We need any profile you land up into after you become a CA. But if you consciously pay attention to analysis of the balance sheet, you as a personal investor also, you will enjoy that. You should do it. It takes time for you to really understand the cash flow statement, how the movement happened, what is the implication, what is the meaning of that. It takes time. So try to learn the cash flow statement also, because it will give you so much information. So division 2 schedule 3 also says you have to maintain the cash flow. So again we'll quickly see. I'm not going to tell you something new here. So you know, I'm just recapping what you know. So cash flow statement, I'll just start with the theory aspects. See, first of all, cash flow statement, only crux I will discuss, then we'll straight away solve the problem. And whenever theory questions are there, we'll discuss the theory question. First of all, cash and cash equivalent and investment. Is investment my cash and cash equivalent? I have got investment in the mutual fund. Is it part of my CC? Now the standard says that if an investment is there, and if you want to say that it is bank balance is there, it is CC. You say straightforward, but what about the investment in mutual fund? If it is readily convertible, has got a short maturity, say less than or equal to 3 months from the date of acquisition, then you can classify it as a CC. Followed, no? Now, what is my cash and cash equivalent in the balance sheet and the cash flow statement? Is it same? Should it be same always? Yeah, need not be. There can be some differences. Like for example, below 2 items, because of these two, there can be difference in what you show closing balance of cash in hand as per Ind AS 7 versus what you show closing balance of cash in hand in the bank balance sheet. One, bank overdraft. It is your part of CC, but it is the financial liability as per balance sheet. So you would have shown it on the liability side. But in CC, you will net it off and say the net balance, bank overdraft. Because of this, difference may come. And unrealized gain or loss on CC itself, which is not part of the CC for CFA cash flow statement, but part of the balance sheet. See, as per Ind AS 21, if you have got dollars in hand, are you supposed to find the fair value of the dollars at the end of the year? Yes. Why? Because it's a monetary asset. We will study that in Ind AS 21 also. Now, if you pass one accounting entry, dollar account debit to forex gain. So the value of dollar will increase. But the standard says that don't do that because it is unrealized. Did you realize it? No. Did you sell that dollar and realize in cash? So this is unrealized. No. So you show what was the dollar balance, cash balance at the beginning only. Unrealized portion on this you don't show. So there can be some difference. So you have to prepare one reconciliation statement. So these two items you have to show you the reconciliation. See, when you have got a cash in hand, okay, say $100 at the beginning of the year. Always my Index 21 says the moment you get a non-functional currency asset, you mention it as spot. Spot was 50. So you told I have got rupees 5,000 worth of dollars. Because ultimately cash flow statement you are preparing in rupees, no? At the end of the year, this dollar price becomes 60. So you pass one, as per Index 21, you pass one accounting entry. Dollar account debit to P&L. How much? 1,000 rupees. And as per balance sheet, you have got 6,000 rupees worth cash in hand. But the standard says, look, that 10 rupees what you are adding extra, it's unrealized, right? So do one thing. Don't consider that unrealized exchange gain on the dollar, because your cash flow statement should be purely cash. It's an non-cash item. Do one thing. Then if you do that, then your cash flow statement will show cash in hand 5,000 rupees. But your balance sheet will show 6,000 rupees. Then do one thing. You prepare one reconciliation statement immediately after the balance sheet. So in your examination question, you may have to do it. Which inter, I don't think so you have come across. Anybody will come across. Inter level only to balance sheet, they will give you, prepare one cash flow statement, tallied, feel good. Here no feel good. Here you have to apply other standards. That's why it's fairly much simpler. Otherwise, if it was really complicated, I would have done initially. We'll complete it like this, just like our inventory. You should never know when we started, when we finished, from now onwards. Okay. Now the next is the classification of the cash flows. We know that there are only three ways, categories: operating activity, investing activities, and financing activity. So which one should go into what? That depends upon the nature of the business, type of the item. So we will see some theoretical questions, then we will come to the method of calculating of the cash flow from operations. This operating we can calculate by two ways, which is called a direct method and indirect method. And before we proceed into that, let us first try to find out some, understand some theoretical question, because they may trick you. That theory question component, they may put it somewhere with the numbers in the question. So we'll move on to the first question here on the classification, theory questions. Now company has provided, very simple, okay? Till now, no, I don't think so any questions have come for the exam. So company has got provided the following information of various assets. Find out which of the following item will be part of the CCE for the purpose of preparation of the cash flow statement. Okay, first we started. Now, what is CCE? Cash and cash equivalent. Is your FD is the CCE? Now it's going to mature in 3 years' time. You say no. If your fixed deposit with HDFC, its original maturity was 2 years, but due for maturity on 30th June, and today is what? 31st March. We can convert, but the point is, when it's like that, I will show it, but I don't, it's in whose control? See, now it's the maturity. Maturity means it's going to happen. I'm going to get cash flow on that day. Okay, so yeah, I understood. I could have cancelled it at any point of time, but the standard says no, you keep it like outstanding. Now tell me this, what about the second case? It is due within 30 days, no? 3 months. But from when? From the date of acquisition. When did you acquire this? And as on 31st March, within 3 months you are going to get this back, get this money. But the question is, when did you acquire it? You must have acquired 2 years back only, no? So it will not be. Followed, no? Redeemable preference shares you acquired on 31st January and redemption is due on 30th April. No. more than 3 months. Cash and balance with the so many branches. All branches are banks in India. Cash balances with international branches. You acquired on 31st January, no? Okay. And is it due within 3 months from the date of acquisition? Sorry, it's the 31st January. Yeah, it is due within 3 months, no? 30th. So, yeah, probably this one is yes. Because February, March, April. Within 30th April, it is due for redemption. No, the theory says if you have to classify investment, it should be from the date of acquisition. 2 years is not a CC. You cannot classify it as a CC. Okay, so exclude it. Yeah. Yeah, wait, if you find that, no, you can, again, you can just check the illustration one. This illustration is as per the new study material, no? Why we are not treating it? Okay, let me think, there must be some reason. Okay, so I'll come, I got your maybe some point, understanding about this. I'm just working on the model, like EPS you asked, no? Think, okay, this I'll think about it. Yeah, because there may be some reason not to do this classification. Okay, to last 3 months, not to classify into cash and cash equivalent. The cash balance at various branches. Okay, maybe see, they go with the objective of acquiring. Now, what is your objective of acquiring this FD with HDFC? Hold to collect. But when you acquire a cash, that means, see, objective, what is cash? Why do you invest in cash? I may have to spend at any point of time. So people generally don't keep big amount of money in cash, businesses. They just keep some small amount required for meeting. Excess money it gets, straight away what they will do? Repay the loan. See, every business, maximum business will be surviving on loan. Excess money, repay the loan. Shortage of money, take the loan. Followed, no? So they don't want to keep that cash in hand. Now, if we, okay, your question is as on 31st March, it came and within the next 3 months it is due. But if I look into the substance of this, why I acquired it? My acquisition was with certain objective. So telling it as a cash in hand may not make sense to me. It is like a long picture to the investors. Now, cash at the various banks, branches of foreign banks, cash, bank OD, temporary OD, yes, it's part of my CC. Treasury bills with the 90 days maturity, yes. So, first thing I am going to exclude this long term. Original maturity is not less than from the date of acquisition. Rest everything I am going to include. And when it comes to bank overdraft, assumed integral part of the entity is cash. Okay, that overdraft is taken for the working capital related work, not for any specific like long term project or something. So, first question is on the whether it is a cash or cash equivalent. Now, from the following transaction, identify which will be qualified for the calculation of operating cash flow. You have to just tell operating, but for this you need to know which type of business they are into. They are into trading of mobile phone. Receipt from sale, purchase, employee expenses, advertisement, credit sale of mobile. Yeah, this is non-cash, credit sale of mobile. Then you have got the, okay, again here purchase also. I also went through. Again, see, again, it may come. No, again this credit sale of mobile also may come. It goes with the whether direct method or indirect method. No, indirect method also you have got a cash flow. Yeah. Credit sale won't come. It's a non-cash. Because there also you will find out how much is the cash paid in the direct method. Yes, now you have got the miscellaneous charges received from the customer for repair of the services, mobile. Loss due to decrease in the market value of the closing stock of the old mobile phone. What it is then? It's the non-cash. Followed, no? No cash was involved now here. Payment to the suppliers, depreciation on the furniture, interest paid on the cash credit, financing, profit on sale of old computers, in exchange of laptop and printer, investment activities, advance received from the customer, operating, cash flows, sales tax paid and excise duty. Yeah, because it is a sales tax paid. What if it is a sales tax or taxes paid on the sale of the land? It is investment. We will discuss about the tax on. Tax should go based on which original item you classify what. Followed, no? If the land you have sold, land is an investment activity, tax also should go as per the land. Followed, no? Yes, so we have seen that 4 items are excluded. Yes, credit sales are excluded. This is excluded, non-cash items. Profit on sale exclude because either it is the cost of finance, other thing, or it is either the non-cash. Rest everything is included. Followed, no? That's why very easy. Again, if you see exam questions, I have been not asked. But if at all they ask you, they may ask you with the explanation, huh? Or they may give you this one of the item in one of the cash flow example. So let us go through with everything. Understand? Now, from the following information taken from the private sector bank, scenario will change now. Identify which will be classified as an operating. Interest received on loan, interest paid on deposit, deposit accepted, loan given. Yeah, because you are a bank. Deposits repaid, commission, lease rental paid for the branches, what it is, service tax paid, operating. It's a part, no, you collect commission, you check, collect, furniture purchased, implementation of software, operating. Yeah. Property, plant and equipment also you will use for operation, no. But when you purchase a property, plant and equipment, you call it as an investment activity. It's an application of the funds, no, not from. Yeah, it's an intangible asset for you, no. Can never operate. Just like without building, you don't have any place of sale. The building will use a operating activity, investment in the building. So using building, what cash flows you get? That is your operational activity. Clear, no? Now, purchase of shares in 100% subsidiary. New car purchased from the Honda dealer in exchange of the old car. Investment. Provident fund of the employees. Operating. Issued employee stock options. Financing. Yeah, issued the. Okay, and here also one portion is non-cash. Even if they simply asked you only operating here. Okay, it's the non-cash. You have not issued any cash here. Okay, so how many? 1, 2, 3, 4, 5, 6. So everything is operating. Okay, but you say that these deposits accepted, loans given to the customers and all, no? This is only for the financial institution. So in the examination, they may ask you this question by telling it is a mobile company. Same deposit, same ditto it looks there. Just look at whom you are there asking. So this looks like a very dangerous area for me. These 4 items, deposits, loan, otherwise it will become what? Deposit accepted is going to become what? Financing activity, no? Deposit accepted, or did you give the deposit? If you are not in a banking business. Loan taken is, that's what, no, deposit, you can call deposit or loan, no. When you accept it, is it not your financial liability? It's a financing activity. Or is it an investment? Not an investment. Is it an operating? No, because you are in a mobile business. Then why did you accept the deposit? No, these deposits made. It would have been deposits made. Then it's an investment. Followed, no? So You don't taken, like I have taken deposit. If I give a deposit to you, it's a liability for you or asset for you? It's a, for you, it's a liability, no? For me, it is an asset. In 109, this is what we spoke. This is what we started with. When you accept a deposit, it's a liability for you, no? My cash is with you. Is it forever for you? You should not give me. Then it's a lie. No. Then what is the fun there? You give me cash and you will return the cash. Accepting the deposits means my SB account. You are a bank. I came and kept some FD or SB with you. It's the deposits. So it's a liability for you. For me, it is an asset. But it becomes an operating activity only for a bank. Other than them, it becomes your financing activity. Followed, no? Then we discussed how many? 6, no? 1, 2, 3, 4, 5, 6. Here it starts. Investment. 1, 2, 3, 4, 5. No, something we missed here. Yeah, this is the last, is the non-cash. 8th one, lease rental. Yeah. Is there like rent paid for the yoke? Yeah, correct. We missed it. Rent paid for, then who will give me the premises to carry on my banking? It is not your investment, it is your operating. Are you clear? Yes, but please rent, Baba. To carry on the bank. Bank is working with one building, no? Building rent is what? Operating or financing? No, that is a bank software is where bank software, it's an investment activity. And that can become operating. If you have taken this software on rent, but you have paid the rent for what? For the building. Or if you have paid the rent for this software, operating. Followed, no? It's a simple, yeah. That's what I'm telling you. Just don't ignore this. Just go through once, understand it. Even one time discussion is also sufficient. I'm telling you, in your exam you will remember this. But participation is important. Application, you think over it. That's very important rather than simply going through. Okay, see this question they asked in MTP. Following is the transactions having a multiple business and multiple segments. Question is very silent. Identify which will be operating, investing and financing. This time you should say not include, exclude. Tell very clearly. Preference shares issue. It's a financing. Purchase shares of 100% company. Investment. Dividend received from the shares. Dividend received from other companies. Which one? Dividend received from other companies, investment income. This okay, this can be, there is one catch here, okay? We will discuss that later. But it is not this can be a financing. Dividend received from the subsidiary because I have got a control over the subsidiary, no? So I can ask my subsidiary to declare the dividend. We'll see this later. Okay, just see, because there is one question, not exactly on dividend, but on the investment, subsequent acquisitions. First time when you acquire the subsidiary, you will show it as a investment activity. Then subsequently, no, it is treated as something like a financing or something. We'll see that. Bonus shares issue, non-cash. Purchase of license for manufacturing of specialty drugs, investment. Royalty from the goods patented by the company. Royalty for the goods patented by the company here. This becomes an operating, no? Because if you have applied for this, or maybe no. Again, it goes for the business. Yeah, it can be for the business. What type of business? Is your business is like I'm an author, I have got a copyright, I receive the royalty. That's my business, is this thing, no? Or if I had purchased it and given it on rent, then maybe I can say classify it as an investment. Rent from the sale of outlet, letting is not the main business. Investment. Interest from loans and advances given. You say investment other than financial institutions. For financial institutions, it becomes an operating. Dividend paid, financing, because you got the money. Interest paid on security deposits, financing other than for financial institutions. Purchased goodwill, investment. Assets acquired by issue of equity shares, non-cash. Interim dividend paid, dissolved the 100% subsidiary and received the amount in settlement, investments. Okay, let us see this. See, issued share capital, financing. Yeah, let us see whatever we discussed. Yeah, sorry, issued preference shares here, but we got, no, when we issued the preference shares, we got money, no? Yeah, it's an assumption. Because generally when you issue the preference shares, it assumes that you have got the cash right now. It doesn't happen that you have issued preference share, but you are not received calls in other areas. Calls can be areas, but at least the first one, application money, though you would have received. Now first one, okay, just go through, we have discussed in detail. Let us see, is there any inconsistency in our understanding? Preference shares, financing, investing, equity shares. Okay, here dividend also from subsidiary investing, others also investing. Now, yeah, there can be one argument, we will discuss that in some other question. Bonus shares exclude, non-cash, we identified. License, investing, unless it is my main business. Royalty, operating. Okay, sorry, no, purchase of a license was investing, we discussed also. Royalty we discussed, it is an operating, assuming that that is my main thing. Rent received from the letting of investing, because it is not my main business. Interest from loans, investing. Dividend paid is financing. Interim interest paid on security, financing. Goodwill is investing. Equity shares are not part issued for asset, financing. Finished. Yes, our understandings are fine. Exclude one or two question where there was some like difference of opinion. Okay, one question came in the RTP. Identify the nature of activities as per 7. Cash paid to employees, operating, development of property cost, investment, borrowing, repaid, financing, supplier, operating, loan to director. Yeah, it's not operating. Operating it's for your yeah, this is a loan investment. Bonus shares issued, no. Dividend paid, financing. Cash received from the trade receivable, operating. Investment, not to be included. Advance from customer, operating. Investment, promissory note, operating. Premise of promissory notes. Promissory notes are, wait. Yeah, it's a financing. Promissory notes are acting as a financing, no? Bills of exchange. See, customers are there, you have got what is that called, operating, you are going to receive. But what you do now? Those customers, you, no, promissory notes are your like bills. Okay, so you have paid the promissory notes. Yeah, you could have treated it. Yeah, let us understand. See, this is what they are telling. This is the financing activity. No, see what happened. Some supplier has supplied some goods to you. You have to pay money to them. So you have drafted one promissory notes that I will pay to the bearer or I will pay you after some time. It's like a bills payable. So you have paid a promissory note, payment of the promissory notes. So when you have paid, see they are telling that, look, promissory notes are like financing arrangements. So you pay that. Whatever you, it's like a taken a loan. Wait. I'm sorry, students. Yeah, again, we should go back to AFM there in the first security valuation chapter. What is a promissory note? You have got a money from the investors and you have, I mixed it with the security bills payable, not bills payable. Bills payable are your operating. Because in operational transaction, in promissory note, what happened? You have taken a money and you promise that after some time you will pay. It's a financing activity. Not this one. The promissory notes have been discussed now. Commercial paper. Yeah, again, if the debtors, then if you treat it like bills payable, then no. It's an operating. Right? We can say it's an assumption. Generally, promissory notes will come for the cash taken. So if you straight away take the cash and give one promissory note, then it becomes your financing activity. Again, question is very not much clear. Cash paid, employee development, borrowing repaid, cash paid to supplier, loan to directors and investing. This is what we discussed. Cash received from the trade receivable. Depreciation is a non-cash. Advance purchased goodwill. Loan to two director. No. Loan is given to director. No, financing for whom? Did we receive? When we receive, it is financing. No. Did the entity give the loan or entity got the loan? Gave. So it's an investing activity. This is when they get the interest, it will. This is also an investment activity. When if you have taken the loan from the director, it's a financing activity. Yeah, what type of, yeah, he's an employee director. You would have considered it as an operating. Again, question is silent. So again, the chances that this question may come as it is. So you can treat it. But do you have any problem with the investment? What is your understanding? What are you thinking? Okay, no? What they have taken, are we okay with that? Or is there a print mistake? Or is it inconsistent? That's what we should look for. Others will go with their stand. If we are convinced with whatever their stand they have taken, because that stand may be with certain assumptions. Yeah, I think these are all the only things. Oh, no, this is I'm not finishing. Okay, this is added in your new syllabus, this particular question, which was part of your November 22 RTP. Now, what is the classification for banks and financial institution? Okay, you have to give anyhow. We can just go through rather than, already we have discussed. See, interest received on loans and advances. Yes, here for banks operating, for others investing. So they may ask you something like this. Expect that, because there is some confusion in that deposits received, given. So please study all these things. So something like this I am expecting. For 4 or 5 marks they may ask you. Interest paid on deposit, same operating financing. Interest and dividend received on the investment of the subsidiary, it is investing for both. Dividend paid, financing for both. Finance charges by the lessee under the finance lease. You are a lessee and you have paid the finance charge. This is the financing activity. Payment towards the reduction of the outstanding finance lease liability, financing activity. Yeah, we understood. No, lease is another way of financing only. If you are a lessee. And for a lessor, it is an investment in gross investment we speak. Interest paid to the vendor for acquiring fixed assets under deferred payment, financing activity. Otherwise, if you do not have, then you should have taken a loan and paid it, purchased it. Principal under the deferred payment for acquisition of principal sum payment. Yes, it's an investment activity. Means you have acquired a PP. And whatever principal portion is there, it's an investment activity. Penal interest received from the customer, operating. Penal interest paid to the supplier, operating. Interest paid on the delayed tax payments. Okay, which tax payment? Question is silent. When they are telling it is operating, we are assuming that it is an operational income. If it is on the capital gains, it will have got an investment. Interest on tax received on tax refund, again assuming it is the same tax refund, operating activity. Okay, one last question, then we will go to the Q&A, like solving of the problems. Company A acquired 70% of the equity shares of B on 20th of July and cash was 15 lakhs paid and 2 lakh equity shares were issued. So leave this, it's the non-cash. But when you have given, what type of activity it is? Investment activity. You have invested in the subsidiary. Now on the date of acquisition, company has got a cash and cash equivalent balance of 2.5 in their books. Now on October, after July you acquired, you further acquired a 10% stake for 8 lakh rupees. Now advise how the above transaction will be disclosed or presented in the statement of P&L or statement of the cash flow. See, now the standard says, look, as per Ind AS 7, the aggregate cash flow arising from the control of the subsidiary shall be presented separately and classified as investment activity. No dispute, no confusion regarding this. Further, the aggregate amount of the cash paid as a consideration is reported net of cash and cash equivalent acquired from the subsidiary. That means when you say my investment activity 15 lakh, you will show net of subsidiaries cash. You remember in Ind AS 103, when we passed the opening goodwill entry, in the net assets, did I include cash also? When I acquired one subsidiary, in 103 opening goodwill entry I passed. What is my entry? Net asset account debit, goodwill account debit, to purchase consideration. In that net asset, cash was also part of that. Yes. But in cash flow statement, when I present a cash flow statement, you would have told my cash investment at a CFS level. Okay, it is not there at a SFS level. Wait. Yeah, some cash goes out now at a CFS level. How much? 15 lakh went. Why? Will I show or will it get eliminated? I will show it, no? Why? Because this is your parent, this is your subsidiary. To acquire these shares, you paid to the owners. So when you talk about the CFS level, as a group as a whole, there was an outflow of cash to the former owners of the subsidiary. How much? 15. But in this process, you get a cash of 2.5 from your subsidiary. That's why Ind AS 7 says, forget no Ind AS 103. 103 entries and all you will passed. Ind AS 7 says that when you present cash and cash equivalent, you should show this investment activity net of the cash from the subsidiary. That means in the closing cash balance, don't add the cash from the subsidiary. We will solve problems on that. It's the presentation. It's the closing cash balance should be deducted from the investment activity. This is what your Ind AS 7 says. Yeah, we'll solve one problem, you will get a better understanding. Thus, the total consideration paid to be shown under investment activity is not 15, it is 15 minus 2.5. Are you clear about this concept? Because as a group as a whole, yes, you paid 15 to third party, but in this process you got 2.5 again, which generally 2.5 would have shown as a closing balance of cash. But they say no, it's not your closing balance of cash, you should reduce it from the investments. On that day, closing balance may be different. Now, issue of equity shares. Further, you have issued the equity share, you exclude it because it is a non-cash. Such a transaction should be disclosed elsewhere that provide the relevant information. Thus, there will not be any impact of the equity shares on the cash flow statement, but you give the disclosure in the financial statement. That's why this question is an important question, because it was there in your MTP, it is there in your test your knowledge also. See, answering this, advice means there are multiple things there. Like you have to speak about this cash in reporting, shares reporting, and the further stake acquisition. Now the further stake acquisition, again Ind AS 7 says that whenever cash flow from the changes in the ownership interest in a subsidiary that do not result in the loss of control shall be treated as financing activity, unless you are holding it as investment. That means after you acquire the control, just like when any change in the NCA happens, we don't hit the P&L account, we hit other equity. Like this, after you acquire a subsidiary without a loss of that control over that subsidiary, if any more further investment will happen or any more sale is going to happen, it is only one financing arrangement between you and your subsidiary. So you should treat that additional acquisition as a financing activity and not as an investment activity. What is the? Because you can use their fund. Once you acquire the control, can't you use your subsidiary's fund to use additionally by the additional stake? Like suppose you acquired 80%. Okay. By acquiring 80%, you got control over 50 lakh rupees of the subsidiary. Can you use this fund to buy additional 10% from the, see, when you acquire 20%, 80%, who is your NCI? 20% are the other people. Can you use this fund to invest and get additional 10% so that your stake is 90 and NCI is only 10? Arre Baba, your subsidiary's money only can be used to buy their stake, no? Can anybody stop you? How you can do it? You have got to control. How can you do it? Simple. Give one interest-free loan to the parent. And what parent will do? Go and buy additional stake of the investment and tell that investment activity. No, it's the financing activity. It can be we can say buyback type of logic. So are you clear, Sana, now? And that's the reason they say that when you don't lose the control, but if there is any additional stake sale happen or additional thing happen, don't touch your P&L account or don't recognize new goodwill. Differences should go to other equity. Same logic here. Once you acquire the controlling stake, any further investment is only a financing activity. If you lose the control due to this, no, this becomes another investment activity. Again, these are all the new things you should learn in here. That's what questions are fairly simple. It's a very small chapter. These are all some adjustments we have to learn. Not even a single question we have to prepare a cash flow statement from two balance sheets. So our understanding cash flow statement, it will come like this. I have shown 12 lakh 50 only for our understanding. Don't do it in exam. So on 31st March, cash flow from financial additional stake you would have shown under financing activity. Yes, before we solve the tax on income, we will look into some theory on the direct and indirect. Okay, so we discussed up to here, correct? So now we will solve the problems. So we have got two methods called the direct method and indirect method. Be careful which method they will ask you. Maximum time they will ask you indirect method. Now, this is applicable only for the operation because investment and financing activity is fairly same. No change there. Now, the difference here is you start with the gross receipts and the gross payments and gross expenses paid and all those stuff. Here you go with the add to the profit and loss account. You take the P&L balance, add three items there, non-cash expenses, items to be shown elsewhere or working capital adjustment. Okay, so we will do both because they have asked certain questions to do on both the methods. Okay, but the final amount will be the same. It's just a way of presenting it. Are you clear, students? Okay, so and again, items wise also you are clear, no? That investment, because we have to solve the problems now, or that investment related, how to present it, net of cash, foreign exchange, cash can be there. You have to show it, reconciliation statement. So this is what they are going to ask you. Now, see, there is one format, which we know that I didn't do it. It is a by default thing. So always you start from the cash from operating activity. If you follow indirect method, you start PAT. Just look for three items. Non-cash, items should be shown somewhere else as investment or financing, working capital adjustment. And if it is an operational tax, no, first add that tax and deduct that tax separately. Because when you say profit after tax, tax is already deducted. But that tax component can be 2 or 3. So you have got EBIT minus tax or PBT, profit before tax minus tax. When you have deducted tax, there can be 2, 3 components of tax. No, tax you must have paid on sale of land, tax on your operational. So you add back all, but you deduct only operational tax. And tax on the investment activity, you deduct there only separately. It's just a presentation. Elsewhere means which one? Second one? No, suppose for example, interest on loan taken, where you would have shown? Is it already net of profit after tax? Paid on loans taken. Is it a cash item? Is it a cash flow? Yes. But is it to be shown under operating activity? No, but when you start with an indirect method, see, in the direct method you don't have this headache. In direct method you need not do this format. Straight away you start with how much cash received from the customer, how much cash paid to the supplier, how much is my employee payment. This is balancing figure is my cash flow from operation, and how much tax you paid. But indirect, since you start with the PAT, this PAT may include your financing cost also, no? Those items only you should show, deduct, add it back. Why you are going to show it separately? Now when you say PAT, tax is deducted, but the tax may have different components. So that should go under respective. Operating tax should go under operating, investing tax should go under investing. So that's why it will separately presented. It is the presentation. You have got investing and financing, net cash flow, add opening, you got the closing cash flow. Okay. Now non-cash items, yes, the financing and investing activities in a transaction that do not require the use of cash shall be excluded, but we need to disclose it somewhere else. Outside cash flow statement, like we have just discussed, no, issue shares for acquisition of something. You have to disclose it, but not in the cash flow statement, somewhere else. Now tax on income should be separately disclosed and classified from operating activities unless they are specifically identified with financing and investing. If they are there, then separately this, see, you have got profit before tax minus tax. You got PAT, which is this amount. What you, now this is add back tax now, which this tax, but deduct only which tax? Operating tax. Add back full tax, but deduct only operating tax. And the other portion you deduct it from the respective heads. Anyhow, such a complicated things, you have got one problem only on the taxation part, but this type of adjustment related you don't have. Understand concept wise, it is just a presentation. Followed, no? Now what about this working capital adjustment, irritation? Why? Because my opening debtor is so much, closing debtor is so much. Now there is, did I get the cash from the debtor, or should I deduct the debtor or add the debtor? Say for example, my opening debtor is 100, closing debtor is 120. In working capital adjustment, should I add change in the debtor or should I deduct change in debtor? Deduct. Question is clear? Because change in the debtor is not a change in the cash flow. So I should add that change in the adjustment of the working capital changes. Now, is there a change in the debtor? Yes, how much? 20. So my only question to you is, this change in the debtor, which is a working capital change, should it be added to this profit after tax or should it be deducted from the profit after tax? That's why there is some confusion, no? I will tell you one easy method. Okay, I always go with the some simple leg. What is that? I'll go with the journal entry. See now, debtor, opening debtor is 500, closing is 900. Now, if the closing debtor had to increase, what should I do? Debit or credit debtor? Debit debtor. If you debit debtor, what you will credit? Cash. Let us assume if debtor has increased, that means cash must have got credited in one or the other way. So if the cash got credited, then deduct. No, simple. No headache there. Like in my example only, 100 was opening debtor, closing debtor is 120. So if the debtor has increased, what did you do with same example? That's why we have to minus. Now if I talk about the stock, stock is also working capital. Opening stock is 500, closing is 300. How my stock came down? To come down, you give it a credit. If you give credit stock, then debit what? Cash. Cash you debited means add. Understood this logic? But liability, again same, go with the journal entry. Liability got changed. Liability increased, you credit. Debit what? Cash. Debit cash means add. Please ask now. No, because there is a change in the debtor. You cannot pinpoint. I am just telling you one easier method. Because if, okay, I'll tell you now. I'll remind again your cash flow statement of the inter also. See, I start with the profit after tax, add non-cash expenses. If item to be shown separately, I will show this. If I don't do this, and then I will do everything as it is. What this entire statement is called? And then everything, that means this also, then I will add a debtor here, creditor here, all these things I will do. Entire statement is called fund flow statement. I'll remind, this entire thing, if you not have done this adjustment, entire statement is called a fund flow statement, which we started to learn first. From fund flow statement, we came to cash flow statement. Because if I talk about a fund flow statement, then what comes is add opening, not cash, add opening fund. What all the things you include in your fund? Cash, debtor, this, that, stock. What is your closing fund? Closing cash, closing debtor. Now, if you don't want to prepare a fund flow, but you want to prepare a cash flow, then the only one adjustment is the fund flow adjustment. The difference between opening debtor and a closing debtor should come here as an operating. Then it becomes a cash flow statement. Understood? That's why I asked you one question, when there is a change in the fund, should I add to the cash flow or should I deduct it from the cash flow? It's a confusing thing. Follow easier method, look at the second leg. I always tell you, in my journal entry, look at the second leg, easier leg. Then the other leg will automatically come to know, should I add it or deduct it? Okay, clear? If the debtors have increased, okay, you deducted, no? Debtors have increased, you deducted. How debtors got increased? Because you must have paid cash, no, to the debtor. Not directly, indirectly. How? Okay. If the debtors have got increased, how debtors got increased, Baba? You have sold. From where stock came to you? You have purchased. Who gave you stock? Supplier. Have you not paid money to the supplier? So if I have to plot one series of entries and all cut short, intermediate, then ultimate entry is debtor debit, cash credit. That's why we cannot pinpoint here. So we do it on overall basis. Perfect? Understood, no? Okay. So now, forex gain we will discuss later when the question comes on the forex part. Yes, so we'll start with the first question. Question number 1. From the following summary cash account of XYZ, prepare a cash flow statement using direct method. Now they have given you the opening balance, equity share issue, receipts. Okay, cash account only they have given you. PP, payroll, tax refund, and which item should go where already we have discussed in detail now. So many questions were there, theory questions. So my point again, why we have to learn those theory, see at a final level, see, read who is this XYZ. First thing, see what items they have given you. It's a simple thing, but they will set a trap like this. If at all they want to do it, they will do it. Follow? Yes, so we straight away start with the direct method. So under direct method, write cash flow from operating activities. In the direct method. So I will just go with the, first start with the operating activity. Since cash account only was given to me, nice. If otherwise I should have found out, I would have prepared one working note, opening stock of debtors, opening value of the debtors, how much sales made, how much is my closing balance is the cash received from the customer. So cash received from the customer is straight away given to me. So I'll write first 2 columns I will draft here. Heading is cash from operations. Since I need to follow direct method, I don't start with a PAT. I start with cash receipt from customers. How much? If this cash account was not given, you would have said working note number 1, and first you should have calculated one cash from the customer. Then what other activities are there? Operating activities from the cash account? Payment. So less cash paid to creditors. How much? Yes, again, since cash account has avoided one working note, others I would have done one working note there. We are in question 1. Is there any other expenses related to the operations? Sorry? Okay, overhead cost, payroll cost, $100. Yeah, I can say minus tax, assuming this tax paid is fully operational. If there is a split in this, I have to split and show it the second leg in some other place. 250. So how much is my cash flow from operations? 250. So if I have started with the PAT, did those three adjustments, I would have landed up with the 250 only. And I hope this part is sitting in your mind, probably at the intermediate level only. Because there we have done extensive, in fact. Not this is simple, everything would have given. I am telling you, not even a single question. Their balance sheet to balance sheet cash flow statement I have to prepare. And I have worked in cash flow statement in company. After 10 years, not that now. Okay, are you done? Yes, now I will start with the cash flow from investment activity. Below this, I will start with the cash flow from investment. Here, I don't have any direct or indirect method. Is there any items connected to the investment activities? Equity share is what? Is a sale of, purchase of fixed assets. Anything you can consider first. Purchase of PP 200. What about the sale? Should I consider the profit or what? Total sales value. Gross value 100. Is there any more item? No. So my investment gave me a negative cash flow. See, my operation gave 250. First thing any investor will look into your operational cash flow. How much your operation is giving. Or there only you are struggling with negative cash flow. Sign of going concern. Maybe in audit they may give you one balance sheet. Which standard to be applied? Or cash flow statement. Look at this negative cash flows. Because that is one of the sign of going concern. Because as per IBC, if it is due more than 1 crore rupees, okay, somebody can knock the door of IBC and within 180 days you can be on, you may be get closed. Now, cash flow from financing activity. Yes, issue of shares 300. Anything else? Repayment of bank loan and dividend paid. We already discussed dividend, interim dividend. So this is my point, students. So all these components, no, they may ask you and create one problem based on that whatever RTP, MTP they have asked with the different type of activities like banking, mobile company. So you add 3, you get net increase in CC from all the activities 100. Add your opening, check that in that closing balance, is there any foreign currencies? No. Unrealized gain is not there, no. Otherwise some reconciliation would have come. Closing balance of CC is 1. Clear? Easy, simple, recollected, no, everything. Yes. Chalo. Next question, you should do it now. Use the following data of ABC to construct a cash flow statement using both direct and indirect. So indirect I will do it. Since direct you have learned now. So I expect you're simple, right? So what you need to do? This time they didn't give you a cash account. This time they give you a balance sheet. And they asked you prepare the direct cash flow statement. under direct method. So they have told you cash, yes, you know. So ultimately you have to give the reconciliation between 14,000 and 4,000. What happened to the 10,000? From where it came? Did it came from the financing, investing, or operating? That is the cash flow statement, no? You are giving a breakup of this movement between these two, right? Okay, can you tell me what is the, if I give you opening retained earning and closing retained earning, what is the reconciliation between these two? What is the statement called? Question is clear? If I give you opening retained earnings or opening other equity, and I'll give you closing other equity, and the reconciliation statement is called, or retained earning, we call that statement as profit and loss account. Because once upon a time this statement was not there. People were only preparing balance sheet. 100 years back somebody invented this reconciliation, and that became very famous, which is part of our accounting education. And so after some time somebody invented this reconciliation, which we call it cash flow statement. It's nothing but a reconciliation statement. So it should perfectly match. Now you have got accounts receivable, prepaid insurance, fixed assets, retained earnings, sale of goods. Okay, they have given you the profit and loss account also for the period. During the financial year, they declared and paid the dividend of 2,500, 46,000 to acquire the cash and the new fixed assets. They were accounts payable was used only for inventory. No debt was retired during the year. Okay, yeah, we'll do it, friends. Again, since we have to do it after a long time, rather than getting stuck, we'll write solution 1, working note 1, calculation of purchase. Now how much? Because they told me cost of goods sold. They didn't tell me purchase. What is the equation for COGS? COGS is equal to opening per stock plus purchases minus closing stock. So if, okay, don't do it. So if I write what is purchases, so purchase is equal to, okay, right, what is my COGS? 1,23,000 plus what is my opening stock? Or should I add closing stock to it, or should I deduct closing stock from the COGS? Add what? Opening stock or closing stock? Closing stock. The same equation, no? Ulta. How much? 37,000 minus opening stock 34,000. We get 1,26,000. Are you clear, student? And why do I need purchases? Because when I find cash paid to the supplier, I have to deduct the purchases, not the COGS. When you speak about the COGS, COGS includes two elements, purchases and change in inventory. Arey Papa, some inventory was there with you, no, at the beginning. Can you say that this is the payment made to the supplier? Meaningless. Are you clear? No doubt? No, please discuss, okay? No hesitation. If you are not clear with these equations, what we are doing. Are you clear? So equation COGS is simple. They gave me COGS there. And they said prepare a direct method. I need a purchase value because I want to know how much paid to the supplier. So first I will find out the purchase value. My purchase value is 1,26,000. Yes, with this I got every information. So start direct method, cash flow from operating. First head cash flow from customer. How much you received from the customer? What is my equation? Opening customer plus sales made during the year minus closing customer should be the cash received from the customer, no? Opening customers plus sales during the year minus closing customer should give you the cash received from the customer. Yeah. Otherwise, how much breakup I should give? If you say all sales are cash sales, then write one more thing. below this cash sales. This 2 lakh what you added here, show 2 lakh here. Have you understood? If you assume that, see, you cannot give any 50, 60, 40, 20 breakup and all. Either you say full is cash sales or full is credit sale. If you say full is cash, then how much is the cash received from the customer? Opening stock minus closing stock or closing debtors. Not about this cash sale, it's the cash received, cash sale straight away. Follow? What is my second heading? Cash paid to vendors. Can you tell me, students, how much is cash paid to the vendors? Okay, others, any other number? Priti got 1,24,000. Cash paid to vendor 1,24,000. Is this okay, everyone? Is this okay, Prithvi? How much did you pay to the customer, vendor? Simple, one basic question I'll ask. What you will do? Immediately you will go to the ledger account. See, if I would have asked you in tally, how much did you pay? You would have gone to the ledger account. Not in ledger account, you would have seen. In ledger account, first you would have seen opening balance. Add what? Purchase. Where do you find the purchases? Will you go to the P&L account? Definitely you would have gone. Provided they would have given you a breakup in schedule 3 format there. Change in inventory and purchase. But these people did one smartness there. In P&L account, they go COGS. Not a separate breakup into purchase and change in inventory. In days 2, we already learned all these ideas. That's why I am doing this now after in days 2. So that you don't tell that COGS or what COGS, where it came from. Understood now? So now, did you get now 1,24,000? Yes. Is there any other item which is related to operations? Wages. How much is wages? Again, where do you know how much wages paid? Simply go back to the wages account. Wages account will have opening outstanding wages plus wage expenses do you incur during the year minus closing wages. How much it comes to? $53. Opening wages is 50 plus 7,000 is expense incurred which you see in the P&L account minus 7,000 is 7,000 plus 50 minus 4,000. Now, is there any more item? Insurance, yeah, what you will assume? What do you think? Okay, if you have taken insurance on PP, what type of activity it is? Investment activity? It is okay. So here they have assumed insurance is a operational activity. See, because it need not be on a PP, we don't know on what it is. Maybe you might have taken stock, you might have taken, or one contract you might have taken, on customer you might have taken. So many things are there. So here you assume insurance as an operating activity. Operations. Operation, no, because you have sold one contract, Arey Baba, you are very afraid. If this customer dies, like banks will take, no. Banks, when bank will give you the loan, you know, on the customer has to take one life policy there, term policy. Investment, maybe, that we don't have any example as such. Others we can say, see, we can interpret it as operating only, because to maintain that, why I need that PPE? To have my operation. So this is like a maintenance cost. Maintenance of PPE I would have taken to operating. No? So you can treat insurance as an operating. Am I done? Insurance and okay, what is your opening value of the insurance? It's a prepaid insurance. Okay, prepaid insurance you have got a 7,000. Okay, that means you have paid in advance. How much cost you incurred? It's an expense for you. Minus 11,000. Okay, how much is prepaid at the end of the year? Okay, simple. Let me go with the journal entry. When you prepaid the insurance, prepaid insurance account to cash. How much? 7,000. Then you incurred expenditure during the year. What did you do? Insurance expense to outstanding insurance. How much? 11,000. So how much is the closing? But is it your full insurance expenditure? Some portion you would have transferred. And your closing prepaid is 5,000. That means you have paid more than, no, 1 minute. Yeah, let me discuss. Insurance expense is 11,000. Okay, out of this insurance expense 11,000, there are two breakup. One is you have already prepaid last year. What you have hit to the P&L account, did you pay this 11? This is your insurance cost for the year, 11,000. Did you pay this? No. Out of this 11,000, 7,000 is adjusted from the opening. That means you should have paid how much? 4,000 from your pocket this year. So actual cash paid should have been 4,000. But again you go to the balance sheet and see one more prepaid. How much? Plus 5,000. So how much actual insurance you paid? 9,000. Are you clear? Yeah, maybe this presentation, please ask this, sir. Yeah, it's a tricky thing. I understand. I didn't explain. I thought it is the same thing. So are you clear now? So what I do from my expenses, I deduct opening prepaid and add closing prepaid. Because this is my expense for the period. Out of this, I will adjusted opening. And I would have assumed 4,000 is what I paid. But since I have got a closing also, add that closing. Okay, let me go with the cash paid for the insurance from, because if we treat it as a prepaid insurance is a change in the working capital. Okay, that we will do in the indirect method. We are going to come. Okay, in indirect method, 1 minute. Yeah, I add 2,000. Add 2,000 under indirect method. So that I cannot consider it here. That is a reduction of 2,000. Debit cash. $11,000 is the negative cost minus 2,000. That way also 9,000. So what you have actually paid is 9,000 out of this year. So like 2,000 is that extra change in the inventory. Difference between these, you adjust it with this. It is like purchases. This is like opening stock. This is like a closing stock. Change in inventory with this. This becomes your COGS. Followed, no students? So now you total this, you get cash flow from operations 21,500. Now add purchase of fixed assets. How much? Oh, sorry. 1 minute. You got cash flow from operations. So write the heading below this. Yeah, purchase of fixed assets, investment activity. What all investment activities you have got? Per PP purchase. So can you tell me what is my PP payments I have done? 46,000. How did you get? 2.7 is the opening. Sorry? No, what is my total PP purchase? Can you tell me, students? PP purchase? No, amount, final amount. 31,000. Negative or positive? Negative. Is there any other number? Vidya, how much PP did you purchase during the year? 61,000 negative 46,000 negative. See, three answers. Let me see. Have they told you anything during the financial year? During the year, ABC paid 46,000 in cash to acquire the fixed assets. Yeah, 46,000. 1 minute. Yes, students. So have you understood about this? Which is the correct one? Okay, 46,000. Okay, how did you get? And if you see, they have told the answer also. See, but there is one element of depreciation. Okay, be careful there. So this is 46,000. One thing is, see, since I told you gross block, just see the difference in the gross block. That is one thing, different gross block. Or if you want to see the WDV, add back that WDV depreciation amount. You get that 46,000. So your purchase of fixed assets is 46. I'll show you the reconciliation later. I've done this reconciliation. In the question they have given, what if they did not have given? That's what we would have calculated. Now, if the question they have given, in fact, they don't give, we will calculate it. Which one? Now, in direct indirect is not applicable from now, no? Yeah, profit or loss, something would have come there. Okay. So next is what? Cash flow from. Okay. So just for your understanding, how to additional calculate the PP if the additional PP was not given to you. Chalo, this 46,000 was not given. I hope now you are very clear. See, net block is 2,71,000. Don't go by the total what they have given in the balance sheet. It is the total of net block there. You will get some weird number. PP gross block change is 46. Or if you talk about net change is 2,40,000. WDV 31. For this, add this depreciation, you get 46. What if the net block is what if net block is given? Okay, in one of the RTP question they gave you like this: opening net block minus depreciation, closing net block. You will calculate like this. See, in this problem they gave you gross block and accumulated depreciation. In one of the RTP question they didn't give you gross block. Understand? And at this problem they gave you acquisitions. So you should use this equation: opening block, okay, minus depreciation, minus closing block. You use the additions. Yeah, please go through this. I hope you are very clear. These are all PP examples. Okay, it's not something new. So we'll move on to the cash flow. You're clear, Nasana? Which one? This one, second. See, this is your opening asset. Net block. You deducted depreciation of 15 because here they deducted here. No. That I am showing you on a net basis. You got net opening, closing net asset. This should have been, would be. If 2,40,000 is your opening balance, if you deduct 15,000 depreciation, what should have been your closing balance? 2,25,000. In reality, what it is? 2,71,000. What does that mean? The difference must be the purchase. Now we will move on to the cash flow from financing activity. Dividend paid is how much? 2,500. They said no, dividend paid during the year, which must have hit your other equity. Debenture receipts. Did you issue debenture? How much? 1.73 minus 1.60. 13,000. Is there any other item? Dividend we have considered. No? Equity shares. Okay, how much? Closing minus opening gives you 4,000. Yes, that's it. We have done cash flow from financing activity, 14,500. For this, you will add the opening cash net. You will check, adding all. So net is 10,000. If you add opening, you will get the closing. Which one? Retained earnings? No. That retained earnings is the profits. What would have gone? It is not going to come. Yeah, somewhere one problem we have come across where two balance sheets they will give you. This is one problem. Done. Now let us do the indirect method. Okay, write the heading indirect method. First, I will start with what? Profit after P&L account. How much is my PAT? 1,000. PAT is 1,000. 1,000 is my PAT, no? Net profit. I'll start from there. PAT. Now, see, only three things you need to look for. Is there in that P&L account, is there any non-cash expense? Yes. What is that? Add depreciation. Have they told you PAT? Tax they have told you? No. So there is no question of adding it back and presenting it separately. Now, how much is your depreciation? 15,000. Is there any item? Okay, non-cash expenses are no more in the P&L. In that P&L account, is there any item which should have been presented as an investment activity or financing activity? No. Now we will move on to the third adjustment, working capital adjustment. Look at this balance sheet. Other than cash, you have got this working capital of receivable, prepaid, inventory. Fixed asset? No. Accounts payable, wages payable. No. So we have got 5 items of working capital. Followed, no? Simple. PAT, you talk non-cash, look into other expenses, go into the working capital. Just look into their balances between opening balance and closing balance and just decide and tell me, when you talk about AR change, should I add it to the cash flow or should I deduct it from the cash flow? AR change. Did my debtors increased or decreased? Decreased. When the debtors are going to decrease, should I add or deduct? Add it to the cash flow. How much? 7,500. Don't apply your mind into something there. Just look into the journal entry. Look into the second line. Clean. Why you want to get into what happened to the debtor, where it came from? Do it very quickly, but know the logic behind it. Now I will go to the second one, prepaid insurance. Should I add or deduct the difference between the opening and the closing? Add it. Why? Prepaid insurance, opening is how much? 7, closing is 5. What accounting entry would have given, because it is the current assets? Which one? 9,000 is current year cash flow. You actually paid in 9,000 cash. Which year you forget? Followed, no? Out of 9,000, 11,000, but how much you show paid? 9,000 you, in reality how much you paid? 9. But in P&L, when you calculated PAT, how much you showed? 11. That's why This is you minus, no? After minusing, you got a PAT, right? Add 2000. So that this 2000 add plus in the PAT already 11,000 is sitting, no? That together makes it 9,000. Have you understood the logic here? To get this 1,000 in the P&L account already you have deducted 11,000, but 11,000 is not your cash insurance. So difference between this opening and closing back, when you add back this plus the P&L expense taken together, this results into your actual cash. Debtor and how much sales your share taken together. That's what, no, I'm telling you, it's a change in the inventory and purchase. It's like that. That logic works here. But you cannot look it individually here. This plus P&L account, you should look it together. Then you get a very clear picture. How much is the inventory now? Add or deduct? Inventory? Deduct. You understood the logic of inventory reduction? Clear, students? Next, what other items I have got? Accounts payable. Add. Easy, no? This method. So confusion only. Fatafat you should be doing. But somebody asks you why. Then you explain them. Why is a conceptual thing. You should know what is the meaning of this 2000, how you should cross verify. So you got cash flow from operation exactly what would have got by that method. It's just two way of presentation. But to understand this 2000 number, you should look in the P&L. To understand this inventory, you should look with the debtor. You should combine this with the debtors and creditors. Because there you said cash paid to the creditor, where you consider this leg. Yeah, please do analysis at home. Spend more time. I hope I gave you that clarity. Okay, rest of the thing is the procedural. Okay, students, you can pause the video. After this thing, I told you, no, the next other things are not different. Okay, you can pause the video, students, and you can continue. You can copy that. Okay, students, you can leave the space here. Understood, no? From here, I just do the copy paste. So direct and indirect makes sense only for the cash flow from operations. Afterwards, no difference. So I'll get the same closing cash balance CC. Clear? Yes, next question. Yes, students, so please pause the video. I think this, what they asked you, only one thing here. What is that? They just told cash from operation. They didn't ask you to prepare a cash flow statement as such. So that first thing, but both direct as well as indirect. Just now what we have done. So they have given you the operating statement means what? P&L. So certain items they have given you, and they have given you two balance sheets here. Okay, so is there any adjustments, anything here? Okay, let me see. I given some comment. Okay, so here what you need to do, provision is added to the non-current liability. Okay, this provision is the non-current liabilities. Okay, they simply added without any addendum. So do only one thing. So you have to give a detailed working, like in the bracket only we have written debtor, this. So maybe in the direct method you have to give the working notes, opening debtor and all. Anyhow, you do it the way we have done it. I'll show you the presentation. Yes, students. So please pause the video and do the working. Let us compare the answers later. Okay, students. So yeah, there was one query, one very nice query. So yeah, weightage of the cash flow statement. If you look into the weightage of the cash flow statement, this is what I say in your new syllabus. They have told how much weightage they want to give. I think on day one I have shown this somewhere in my introduction slide. If you see, they say that for general financial statement, 10 to 15% weightage, and they may give you anywhere, and one of the cash flow statement is sitting there. And if you see in the new syllabus, my previous syllabus, in 11 attempts, 3 times they have asked this question. Look at the question. Tell me one question, whatever they have asked. Extraordinary sum, nowhere. No, they have asked straight away from the material only. Okay, so like this, my point, just don't leave any chapters. But in every chapter, learn important. That you do. Selective study, you do in each chapter wise, but in chapter wise, you study highly probable. Example questions may be there. You study that if you find that is highly relevant. So in that case, no, since you are not going to cover everything, it becomes small only actually. Follow, no, everything we cannot study. Okay, let us see. 115 minimum 5. They said that minimum though we are going to ask 115, 5 to 10 marks. And your favorite, one more favorite, where is this? 109. 10 to 15 marks. Not even a single financial instrument, not even a single attempt where there is no question. Minimum 10 mark question you are going to get. So in entire full one chapter, these are all chapters where sure shot you are going to get, which that is unpredictable. Okay, so now we will just compare the answers. Yeah, please discuss if you are not clear. I wish you would have discussed. Under direct method we are supposed to do. Okay, under direct method, see, I will tell you the difference. Previously they had made a provision. This provision was one working capital related adjustment. But this provision in the new syllabus, whatever printout I have given to you, it has been part of your non-current liability. So in working capital adjustment, it is not going to come. Follow, no, increase, decrease is not going to happen. Now again, this question is predominantly based, because I will show you the suggested answer also. In the previous question, in the bracket only we have written there. Opening stock, you are asking me, sir, which is opening, which is closing. But here we may have to make one working notes if this question comes. Now first is the calculation of purchases. We know that we need. Did you get this 3,49,000 COGS plus closing stock minus opening stock? Why do we need this for direct method? Do indirect method, do we need this? We don't need it because we know only the difference. Everyone must have got this, correct? Now I'll go to the direct method. How much is cash received from the customer? See, this I wanted you to do one working note number 1. I have presented it here, but institute has done a separate working note for this. Since they didn't ask you entire cash flow statement, what I interpret that they will give one special mark for this, provided you do separate working note, not incorporate here only. Now sales you have taken 5 lakh, opening debtor minus this. Did you get 4,97,000? Any mistakes here? No, right? Then cash payment to the creditors. I wanted purchase. Purchase we have calculated from the working note. Did you get 3,45,000? Then I'll move to the overheads. Administration and selling overheads 55,000, which is hit in the P&L account. Add opening payables less closing payables for that provision, which is that payable for the expenses, this 10 and 7. Because trade payable I have taken with the inventory purchases. Followed, no? And provisions so you don't have, because what they have done, they have added here. Did you get this 52,000? So this is your cash profit. Now tax paid is there, which is on the face of the P&L account, you show separately. Did you get cash flow from operations? Yes. Now you want to score full for this, prepare a working note separately. Otherwise they may allot one number for this, but the 2 marks you may simply lose for not preparing that working note. Yes, no mistakes, nobody, perfect everyone, very good. Now indirect method if I go, yeah, anything? Tax, okay, anyhow, no problem, you understood now. Let us see the institute method, how they have presented. It's just a presentation. Then you will not get this cash flow from operation, no? You must have got 1 lakh. No, gone. Because you paid the tax there, where you will show. It will not change, it will change your cash flow statement only, no? And you would got that difference in the closing, now indirect method, same amount would have gone. So indirect method, you start with the profit as per P&L account 53. First, non-cash expenses, depreciation you would have added back. Loss on sale of asset is a non-cash. Yeah, it is a non-cash. No, loss is a non-cash. If it is the profit on sale of machine, it will go under your investment activity. Loss means you didn't receive, no, you got. Yeah, we will show only the sale there, and sale includes your, if profit is there, profit is included, loss is there, loss is excluded. But doesn't matter, you treat it as a non-cash also loss, or you treat it other place, you show it other. Accounting presentation, it doesn't affect. Interest paid, why you removed it? You paid, no, in cash. Is it full 3000 debit to P&L account? Yes. Since there is no item in the balance sheet, you are assuming that 3 lakh debited is paid. Otherwise, you would have one more adjustment, you would have seen there how much is actually paid. You will add back 3, but what you show in the investment activity is what is going to come from the balance sheet. Change in the operating assets, decrease in inventory, did you add? Increase in debtors, increase in creditors, increase in the expense payables. That's it. Because other than this, you don't have any other working capital, no. Any mistakes here? Anybody? I can proceed further? Yes. Sorry? Yeah, I think we can calculate, but yeah, balance sheet is tallied, no? Yeah, it's okay. Just check that. The retained earnings has got increased by 53,000. Where is liability? Equity and liability. You have got non-current liabilities, sorry, shareholders fund from 50 to 60 happened. So how much is the increase? 10,000. How much profit did you make during the year? 53,000. So yeah, you can do, assuming that that difference is the dividend paid. It was there, no? So this is the first reconciliation. See, first thing you have to see this. Where? Is not matching. Yeah, because see, I don't know, there may be some difference. So that's why they again, students, that's why they simply asked you operating cash flow. They didn't ask you full cash flow statement. Then all the banda, like all whatever something happened, would have come out. Otherwise, see, we can always do that. If balance sheets are tallying, P&L items have gone correctly, obviously it should tally. Here again, we have to find out something must have gone wrong there somewhere. Balance sheet tallies, but your P&L items are going properly, or is there, what the difference there? Some adjustments have happened. So pinpoint, I don't know whether it's possible or not. So cash flow from operation is 70. Clear? Now ICA material, they have done this and they have given you as a working note 1, 2, 3, and they have done same numbers what you got on the face of the P&L account, this direct method, they are given on the working note. Indirect method, they have gone here only. And they said that both will be same. Are you clear? So if this question comes, you have to do it that way. Yes. Next question, examination of December 21. So there is one twist came in this question. I think it's the same question, also calculate, and they said cash from operation using indirect method. Only one leg they give. Correct, no? It's the same question, right? If you go to the balance sheet, it is the same question. But only one thing is, they asked you indirect method. How many marks this question came? 6 marks. Out of that 1 mark, they want to give you for the theory. They said that, look, one twist suddenly, because they don't want to give full 6, no? You tell me, suppose this type of twist you find in the exam. In 2021, during your financial year only, one land was sold for 5 crore. Which activity it is? And land was purchased for 3 crore. Which activity it is? So what did they do? No, they reported a net of 2. Advise whether this treatment is correct. No, that's what you need to tell. You have to tell that no, this treatment is not correct. Why? Because you have to show it on a gross basis. You have to separately show how much cash received from the sale of land, how much cash paid to the purchase of land. You can't simply net it on, show it on a single item. So this is one line, 1 mark answer. So what I have done, I have given that in our theory also. Okay. So 1 minute. Yeah, I have updated this particular information in the theory. See here, I told this presentation on net basis. Okay, students. So next, please pause this video and do the working. Let's compare the answers.